This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Gangster, not answer, not private car. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I've got a few funny things to show you first. So we're going to kind of open with a joke, ease ourselves into today. I'm going to do some mocking and jeering at certain things, okay? So don't take anything personally, I'm just trying to have a bit of fun, okay? It's business, not personal as always. And we are going to look at the cycles for Bitcoin because we should probably be about to find a cycle low. Got some Elliott wave counts to support that. We'll talk about the alternate idea for the count, which is not really super bullish, but at least we've got some hard and fast levels we can look at and say, so long as price doesn't trade there, then happy days. So I'll show you that as well. And then we've got a few kind of bigger picture, longer term cycle ideas. And we'll run through some charts and live positions as always. So kicking things off with a couple of jokes, okay? I found this headline, I thought this was hilarious. Bitcoin sinks to 115,000, right? I just thought this was like the most normie headline of all time, right? Sinks to 115k is just hilarious to me. And it kind of occurred to me that we spend so much time kind of talking about the big picture and talking about adoption and everything else Bitcoin related, and we spend so much other time trading this thing that from time to time I just kind of forget that, oh yeah, it's 115k. Right? For one Bitcoin, it's $115,000. I mean, how many people actually even have a liquid 115k? Like, not that many if you really think about it. Bitcoin has already become this kind of like elite tier asset where only the elite can actually hold a whole Bitcoin now. Of course, not that that matters, right? You can hold fractions of a Bitcoin and still enjoy the same percentage gains as a whole coiner, but it just really doesn't seem that long ago that this thing was trading at 4 figures a coin or less, right? And now all of a sudden we're making headlines like sinks to 115k, which, you know, in a few years' time, it seems perfectly reasonable that this is going to say Bitcoin crashes to 300,000, right? Bitcoin sinks to 850k, right? Do you know what I mean? Where is this going to stop? Bitcoin craters to 1.5 mil. I just think, like, I don't know. This was pretty funny. This cheered me up. I hope you found some enjoyment out of this too. Now, this is even funnier to me, okay? And it's actually been quite a long time since I've seen this kind of FUD headline show up. I would also point out that we've got this FUD, which, by the way, is like nearly 300,000 impressions, and we've got this right into a cycle low, which is always pretty interesting from an account that I speculate likely works for market makers as well, okay? And here's the BS narrative. For the first time in over a decade, the two Bitcoin mining pools now control more than 51% of the network's hash power. This means a 51% attack is... Sorry. This means a 51% attack is now possible, right? They can rewrite transactions, block confirmations, counterfeit coins, censor the chain, and much more. No, false, bogus, right? So why are you lying? Why are we lying about this? Okay, that's not what this means. Just because two pools contain 51% of the hash rate, which, by the way, I haven't verified. I don't know if that's true, but let's just say that part is, okay, and they do control 51% of the hash power. Somebody needs to learn how pools work, right? That does not mean the entire pool can direct all of the hash rate, because the miners are still decentralized around the world. They still function independently, right? It's just they pool their hash power and then split the profits. But as soon as one of these miners detects foul play, okay, they will switch pools, right? And the other pools will also reroute to defend the network. Why? Because if you're a Bitcoin miner, you're incentivized to protect your investment, to mine openly and honestly. You're not incentivized to invest all this money in mining equipment, power, cooling, maintenance, replacing the parts, hiring the team to run it all. You don't invest all that capital there just to attack your own thing and bankrupt your business model, right? So, I mean, this is the most like normie bot headline I've seen in a long time. And it's not the first time I've seen it. I've seen this dozens of times. I'm sure if you go back through the 1,000 odd videos I put out on this channel, you'll be able to find me laughing and saying the exact same things at these type of headlines from a few years ago. But it's just been a long time since I've seen it, right? So just because 51% of the hash rate is centralized, quote, centralized, in two different pools, does not necessarily mean that all the miners are in the same room, right? It doesn't mean that all the miners are controlled by the same entity, right? It's not like these pools can just gather up all the hash power and use it to attack the chain. And even if they could, which of course they can't, like I said earlier, why would they? Right? Why would they do that? You know, like somebody has to read the white paper at some point. Like you can't just be in this space and react to stuff like this. Come on, we got to do better. Study Bitcoin. Why are you holding this thing if you don't even know how mining pools work? So anyway, there's my rant on that. And I've got one more kind of mocking and jeering thing to laugh at right now. And that is, of course, that this dip is unbearable, right? We are crashing to prices not seen since a few days ago. We are cratering from 120 to 113,000 with Bitcoin now down something like 6% off the highs. I mean, how are we going to cope with this, right? What are we going to do? Let's take a look at the chart right here. I mean, look at the bloodbath that is at the hard right edge. I mean, what are we going to do, guys? So I think what we should do is just kind of stay calm and chill out, right? And stop being a tape slave, because the timeline has grown soft, right? It really has. Softer than a 75-year-old without any of those magic blue pills. This is the weakest correction yet. We've seen 23, 20, 22, 34, 18, 32, 12, and now 9%, okay? At the hard right edge, 9% so far. Now, can it get worse? Sure. But even if it doubled from here, right, and we got down to 20%, realistically, it would still just be in the normal range for these corrections, okay? We could go all the way down 30% and it would still be normal weekly cycle low resetting things. Now, I made the case that given that this is the weekly cycle and how I'm counting this, as you'll see a bit later on, I don't really think it's likely we're going to see a 30% decline or even a 20% decline. I actually think we're pretty close to bottoming. You'll see that in a moment. And the reason I say that is because if you feel uneasy with your investments or trading in the past few days, then understand this quote. Cycles are in control. This is absolutely correct. They are. So I'm going to strip this chart all the way back, okay, and just see what we've got. Now, I think this is the weekly cycle. That's pretty clear. We confirmed that in real time with the trend line break and whatever, right? We already know about this. Now, since then, we've only gone one daily cycle, two daily cycles. This first daily cycle was a little bit longer, okay, about 76 days. But the one before it was shorter, okay? So we kind of inverted into the weekly cycle low, very typical Bitcoin stuff this cycle. And then to harmonize or equilibrate or mean revert, whatever you want to call it, the shorter cycle, we had a longer cycle. And then, of course, the average of these two cycles here comes out within tolerance, within spec. Okay, so we've got an average of two 60-day cycles here, happy days. And therefore, we've been postulating that all is right with the world again. And we're going to have a normal and to be expected 60-day cycle in here. Okay, and right on schedule, with tomorrow being a perfect day 60, we seem to be working on a daily cycle low with a FUD campaign, with sentiment going soft, and, you know, with all this kind of BS going around. So I don't think there's anything wrong with this, to be honest, okay? I think so long as we can get a swing and a reversal in the next few days and move higher, then we are still doing normal and to be expected things. We're still fairly early in the weekly cycle. I can see some other cycle traders counting this quite weird, and they're saying things like the weekly cycle may have topped and we should be heading down. And look, it's always possible because the cycle translation can occur at any moment. But typically what we've seen the entire way up so far, okay, is 1, 2, 3, and then a short cycle to invert and give us the weekly cycle. Then we've had like 1, 2, 3, and a short cycle, 4, so 3.5 basically, to give us the weekly cycle. Then we got the same thing, 1, 2, 3, and an inversion, weekly cycle, 1, 2, 3, 4, and then kind of this like inversion here, okay, but then there was also an inversion here, so that's kind of a bit weird. But you can see that mostly speaking, we get 3, maybe 4 daily cycles, and then an inversion to give us the weekly cycle. And so in here, now we've gone 1, 2, potentially, right, 3, and then maybe look for another half, okay, and then all would be right with the world. So I still make the case that the cycles are in control, nothing is really out of the ordinary yet. Now start to move down, okay, maybe this position gets stopped out, then I think we have to even entertain calling major tops here, okay? I don't think we should be failing daily cycles down below 100k if we really are in that kind of final blow off top moment, okay? If this really is a parabola and we really are approaching the final blow off top moment, then it should just get more and more steep from here. So trading down and failing cycles, I think would speak to this thing having topped, right? But that's not the base case now. Why should we entertain that right now when we're only 9% off the highs, the cycles are still holding pretty well, and everything seems right with the world so long as we can find a swing any day now and move higher. Now, in addition to this, if I take the cycles off and grab the indicator here, the indicator has also done what it was supposed to do, right? It has, first of all, it found this 76-day cycle low in here, okay? It found this longer one, and then it's painted a 60-day bar from there, okay? So it's supposed to do that. Now, in the meantime, it did find a tradable swing low that you could structure a trade around. But all we need to see is this low undercut this one, and then it will move the indicator to here, find another tradable low to structure a trade around. That will be perfectly inside the window, and then it should be time to go again. So I don't really see the problem here in terms of the cycle count, right? The cycle count seems to me like it is lining up to just be normal and to be expected. And then after hopefully one more daily cycle that right translates, then we can maybe look for an inversion into the weekly cycle low. I'm also going to flip this onto the weekly time frame, okay, and zoom out and show you this experimental count in pink. So the pink count was an experimental count at 106 days, okay? And if you do two 106-day counts added together, that gives you 3.5 daily cycles, which also you'll notice is the weekly cycle. So essentially, if we look at the blue arrows for the weekly cycle lows, what you'll notice is we get a 106-day count at the weekly cycle plus or minus a week, let's say. Okay, then the half cycle low in the weekly cycle comes at 106 days. Okay, then another 106 days gives us the weekly cycle low. Then we get a half cycle low in the weekly cycle. Another 106 days gives us the weekly cycle low. Same thing here. Halfway through, we break up with a 106-day cycle, and then another 106 days, we land on the weekly cycle. And you'll see this thing repeats, right? Another 106 days, we get halfway through the cycle, another 106. Okay, this one took, an extra week or two, whatever. There's always going to be a bit of tolerance. But then notice how this daily cycle low, or the half cycle low in the weekly cycle, okay, lands again at 106 days. And then if we go forward 1, 2.5, we land back on 106 days, okay? So everything seems like we've still got plenty of space in the cycles. And I can also do this. If I grab this, and this, and just shove this over a couple of weeks to account for the fact that this weekly cycle showed up a little late, okay? So we'll do this here to align it with the weekly cycle perfectly. So it's just a few weeks later. Notice how that then brings this secondary 106-day count, the weekly cycle, perfectly in line with the expected daily cycle count based on 3 normal 60-day cycles and then an inversion into the weekly cycle. So really, I think everything's okay, right? And as long as we're about to find a daily cycle low here and resolve to new highs, then really 150k daily cycle low, one final push, left translation and fail into the weekly cycle, okay, and then we can talk about either the lower high and fail 4-year cycle, or perhaps even, if we're really lucky, one final blow off left translation and then fail from here. Okay, either of those paths are on the table, but for now, I don't want to focus on that, okay? What I want to focus on is this, because there's no real reason to bet against a trend of higher highs and higher lows, right? Remember the Elliott wave count here as well, if I turn off this because it's getting a bit messy, is that this whole thing is 1, 2, 3, 4, and then this whole thing is the extended fifth wave, which means so far we've gone 1, 2, right? This should be 3, 4 in here maybe, and then 5, or even this whole thing is 1, 2, this will be 3, 4 into the weekly cycle, 5 into some insane berserko numbers out of that weekly cycle low into the end of the year. But notice there's still a long way to go, right? There's still a lot of work to do here potentially. And the only way we can stay on trend for that, if it is even possible, is we have to be willing to kind of let this thing chop around and not get caught up in the tape, right? Not become slaves to the tape. So short term, I'm going to say long and strong so long as we can find a swing low in that window to find the daily cycle low, as you can see. So with a bit of luck, we'll be able to get one of those and a swing and a reversal any day now. And then it really should be go time, right? We really have run out of excuses not to at least crack through 130k. Also, above 130k, we kind of rule out the bearish probabilities a lot more of having this whole thing be a B before a big C correction and enter a bear market right away. So long as we can push above 130k here, then I think we can pretty much, with a much higher degree of confidence, say that we are going to much higher numbers. And although a lot of people kind of think that's mental, okay, it's only a 15% move. We can do that in 1 or 2 daily candles, especially out of a daily cycle low. So stay positive for now, okay? Anything and everything is on the table. Are we going to make a lower low? We'll find out, okay? But I think we're pretty close. And I've been also very consistent in saying for this entire daily cycle that the next daily cycle low I don't think goes below 108k. And so far, we're actually holding up okay, aren't we? So let's continue to push, for now at least. Like I said, in the window for the indicator. Speaking of the indicator, quick plug, okay, you have 13 days left on the countdown to secure the lifetime indicator pricing before it doubles. All you need to do is be signed up before this countdown timer expires, and then you will secure the lifetime discount. Fitting in with this theme of the cycle's pretty much bottomed, right, and we're looking for some upside here. Remember this big mic count that we were talking about, seeing a pull down to about 115-ish K right in that timing window for the 21st of August? right? As you can see right here, okay, which is of course a perfect day 60 cycle low for Bitcoin. Well, here's an update, okay? It seems like we've pretty much done it, doesn't it? We're pretty much down there. Yeah, we went a couple of K below 115, whatever. I'm okay with that. What's a couple of K amongst friends after all? And again, we're right in that timing window, aren't we? The 21st is tomorrow now. So long as we can actually find a bottom here and start to turn around in the next couple of days, I maintain that everything is actually a-okay. This would be wave 2, and then we can crack on up. Meanwhile, the banana zone may well disappoint, with many influencers, including me, predicting very bullish Q4 and Q1 moves. I'm not in the Q1 camp, as I think you know. Some calling for 400k plus. Now, never say never, but I don't think that's likely. And we're even starting to see Wall Street forecasting 6-figure ETH prices, which is pretty crazy. But objectively speaking, we do still have time, right? This is, remember, a monthly chart. And we've still potentially got a good few months of upside here just to complete a normal and to be expected right translated 4-year cycle. So does the volatility diminish? We don't necessarily have to have a big parabolic blow off top like we've seen prior, although I wouldn't be surprised if we did, okay? It would make total sense to me if we at least get a nice big squeeze here. But overall, note how much time we've got, okay? Yes, we're running out, but potentially there's a good few months of upside left ahead. And this is really nice here from Brett, because once Bitcoin tends to top, we tend to see the stock market chop as well in a range. A lot of this is to do with the kind of liquidity cycles and that kind of thing, but it's pretty interesting that the S&P had an out of sync 4-year cycle with Bitcoins for quite a long time. But after the 22 bear market, I have the current count for the S&P 500 as inverted at the half cycle low. So at year 2, it printed a 4-year cycle low and is now inverted, which brings them back into sync. And the important point here is that means as Bitcoin is about to top for its 4-year cycle and head for a 4-year cycle low next year, so is the stock market, okay? They're in sync. And for anyone that watched the gold video yesterday, you know gold is also getting ready to top for its 4-year cycle and head for that 4-year cycle low next year. So Bitcoin, gold, and the stocks all are synced up to bottom roughly at the same time next year. And that also means they're also synced up to, roughly speaking, top at the same time this year as well. Obviously, there could be a couple of months of wiggle room between each asset in terms of where they top. But wholly speaking, it's only reasonable from my perspective and from a cycle perspective at least to expect these things to top this year and then start to target 4-year lows into late 2026. Meanwhile, no one cares, okay? It's the absolute truth. Nobody cares, okay? Only the people that have cared the entire time care. Everyone else is busy doing other things with their life. And you can see that here from Ben Cohen, because the Bitcoin social interest metric of his remains depressed, right? Below bear market low levels. I mean, retail has fully given up. And I think this guy here nails it. People have gotten so wrecked by this market that they just left civilization. They don't care anymore, right? They have just concluded that this space is a scam. And to be honest, I don't even blame them. I don't know what you think about that. I'd love to hear it in the comments. But objectively speaking, there is no retail. And I often hear people say this market couldn't possibly top because there's no euphoria. But there's probably not going to be euphoria if retail doesn't come back. And I really don't think it's going to come back anywhere close to the levels we saw at prior euphoric bull market tops. I'm open to being proven wrong about this as always, but I just can't see it personally at the moment. And that also feeds into my idea that breadth is going to remain thin, as we are currently seeing and as has been expected on this channel. This right here is Bitcoin dominance plus Ethereum dominance plus XRP dominance. And what you'll notice is this thing has hardly fallen, especially relative to the steep decline in Bitcoin dominance shown in orange. So to be clear, Bitcoin dominance falling off a cliff here. In fact, let's pull up a chart, zoom all the way out. Remember me saying for a long time, okay, don't even talk to me until we've broken down? Well, at the hard right edge, we've actually broken down. We closed multiple daily candles below this trend line, and now we're coming back in for a retest and possible resumption to the downside. For the first time in ages, I have to look at this and say, well, what is this objectively speaking? This is a breakdown in Bitcoin dominance. And so again, why is this important? Because at the hard right edge, Bitcoin dominance is breaking down and confirming a breakdown and about to resume lower by the looks of it. It has officially confirmed a true technical trend change. But at the same time, Bitcoin dominance plus ETH dominance plus XRP dominance has barely moved, right? Take a look at this. Couple of percent just trading sideways in a range. And this is super important to understand because whilst other analysts keep talking about Bitcoin dominance falling, which of course it is, the reality is that capital is flowing from Bitcoin into ETH and XRP. It's not flowing into the rest of the altcoin universe. So Bitcoin dominance falling is not really a sign of true alt season or, here's the key part, a broad-based alt season. Instead, it's just rotation into the other two largest alts,
which explains why they have both been going vertical and not much else has. So in other words, small cap alts still aren't participating because breadth remains thin, and they're getting drained relative to Bitcoin, Ethereum, and XRP. There is an argument to be made that ETH and XRP will pump first, okay, and then the gains will rotate from there into the smaller caps. At that point, then we can start to talk about broad-based alt season. But for now, at least, this seems to remain a very thin market. And to be fair, we're seeing the same thing in the stocks, right? We're seeing this Mag 7 continue to drag up the majors in the US. Breadth's still pretty thin. The Russell 2K has been creeping up. And in the stock market, we've still got a little bit of a pullback. We're still just sat just off all-time highs. And notice how people are continuing to be hyper bearish and perpetually try to call tops the entire way up here. Is a decline into a daily cycle low expected in the not too distant future? Yes, of course it is. And we are firing warning signs with a breakdown at the hard right edge, but as I've been saying a bunch of times, okay, expect a bunch of fake outs, expect us to continuously find the area the market is respecting as support and adjusting this trend line to keep us in trend for a little while longer. So nothing to write home about there at the moment. Long and strong continue to push. Gold still ranging, okay, at some point this thing's going to break. I've been speculating it'll be to the upside, but if it's to the downside, then fine. We're wrong about the final push. There isn't one final high left, and we're just going to start correcting from here. If so, we can get some shorts on potentially on breakdowns, or think about lightening up some other positions. But you know me, I'm still very bullish until proven otherwise. I think this thing is going to break out from the top, and I think the weekly cycle is getting ready to bottom slightly early here and then move higher. And the reason I say that, of course, is because the miners and the mining ETFs and all that kind of thing keep ripping higher. So I don't believe this is happening for no reason. I believe this is leading the gold and silver markets. And Bitcoin, I think we've done to death, right? Let's give it the benefit of the doubt. We're in the window for the cycle low, so let's just see if we can find one. If we don't find one, and this turns out to be an early cycle low that we're about to fail, then we'll notice that in a few days' time. But for now, let's not try to be premature to make any judgments or decisions, and let's keep taking this thing one day at a time. So I'm your boy Camel. I hope you're doing well in life, and until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel